All right, traders, what you see happening right now in markets is unprecedented, right? In the past 22 days, the S&P 500 has fallen 30%. That has not happened since 1930. Last week, we put out a video on Monday, here's the thumbnail, all right, where we mentioned that there's an opportunity on two currencies, the dollar and the yen. And since then, those two pairs have had their single largest point moves in our bias's direction in the past 10 years, all right? So yes, there has been massive success, but those trades have kind of cooled off. What is the next step? We're gonna be breaking down exactly what has happened in the past and where we can see markets going. So that way you guys do not miss any more of these opportunities, okay? These are very, very rare events happening. So get ready, all right? Let's roll the intro. All right. Ready to go. All right, guys, let's get into it. Welcome back to the Top Trader channel. We had a lot to talk about. It's your head trader here, Cleveland Bishop.
Got your head of research, Kyler.
And here at the Top Trader channel, we like to talk about the market fundamentals. Fundamentals have been washing everyone in and out of this market like never before.
Been a rough ride.
Okay, it's been an insane ride. Luckily, we have had, and we are fortunate to have been paying attention to fundamentals our entire careers, and more exclusively for the past 4 or 5 months, because that kind of showed us that the risk scenario that was coming into markets, all right, was going to play out. All right, with the Japanese yen, with the Swiss franc, those are pairs that have exploded in value, and we have been riding those moves now for the past 2 or 3 weeks, okay? Some of our guys inside of the academy have seen the largest trades that they have ever had in their trading careers.
We had one member come out with 900 pips, we had another come out with 200 pips, and I know you did a lot of tallying of the total amount of pips, and it's in the thousands easily.
Yeah. So combined, I think some of our guys, I haven't asked everyone, but who I've been able to get in touch with up until this point, over 4,200 points have been gained by some of the academy folks. Some guys playing with some pretty hefty portfolios.
Yeah, it's just awesome seeing all the academy members understand these fundamentals like a pro. I mean, these are things playing out and they understand them to the T.
Yeah. And so again, I'm gonna be honest, guys, for us, this has also been the largest trade that I have had in the past 5 or 6 years. I guess comparison-wise, we'd have to go back,
probably the Brexit vote.
Yeah,
that was like the last time you saw thousands and thousands of pips move.
Yeah,
was the Brexit vote.
Yeah, and so again, what we're gonna do here, real quick, is let's run the tape. Last Monday, last Monday, we did put out that this was an opportunity that you guys could take. All right, here's a quick look on Monday where we mentioned, hey, there is still an opportunity to go long dollar, go long yen. Take a look. So again, at the end of the day, if you guys are not yet exposed to this dollar, if you did not make any money on the dollar and on the JPY, then again, my opinion, all right, it was my opinion in the beginning, and it still is my opinion till this day. I do believe that as long as things start to get crazier, which again, based off of all estimates, it's going to get a lot more worse than it gets better. We can continue to see a rise in the dollar. We could continue to see here this JPY continue to break that high. All right, and so some of the pairs that we were playing that on was the Euro USD. As you guys can see here, obviously Euro USD falls. We're getting an appreciation in the dollar.
Euro USD, we had the AUD USD. We played NZD USD as well. So there was about, to diversify across all those currency pairs, it was a nice, USD trade. It was a nice USD trade.
Yeah. And so here you got the AUD USD here. We were trading at 66 cents to the dollar. We fell as low as 55. Okay, guys, that was in the span of, again, 2 weeks, 1,000 pip move in the span of 2 weeks, all right?
And that was like a good monetary divergent play, because you had the USD strength that we were looking for, but at the same time, you had the Australian Central Bank, the RBA, talking about different stimulus measures, but also cutting rates. So it's a crazy economic divergence play.
Right, the economic divergences are the biggest trading opportunities that you'll ever find in Forex. There's nothing else bigger that you can take advantage of, and that was an example of two currencies going opposite of each other at massive rates.
Those are the moves that you guys need to be in, that you want to be in.
Yeah, and that's exactly what we look for on a daily basis. Now, here's the deal. We've had so many people now trying to come into the academy. We're booked with probably about 30 to 40 calls every day. We're probably going to hit our threshold on how many people can actively be in the academy at once. So right now it is going to close down. So we're going to have to close down the academy, and we've been trying to figure out a way how we can really just share this idea of fundamentals at a larger scale. We want thousands and thousands and thousands of people to take advantage of this. This is really messed up times. It's bittersweet almost, you know, for people in our academy to be making money. That's awesome. But at the same time, you know, there are a lot of people that are losing money, you know, that are losing their jobs.
I mean, guys, this is like when you guys see the 2008 sell-off on the charts, this is happening right in front of your eyes, and we just need to get that information out to you guys, because a lot of it is going to go right over your guys' head.
Yeah.
You know, this is your parents' 401k, which in 2008 you guys didn't, you know, necessarily see that, but they felt it, and this is happening right in front of us. You guys are feeling this, you know, just like how we are. It's just same thing how your parents are. It's right here.
Yeah. So some people, again, are losing lots of money. Some people are making lots of money right now in real life. Don't let it fly over your head. Okay, so what we're launching is the Recession Room. I mean, all you gotta go to is recessionroom.com. We got the domain, and basically what we're gonna be doing is we're gonna have a multitude of different cool features and services for you guys, different investment opportunities that are happening during the recession.
Resources for you guys.
You know, we're going to be putting out all of the trades that we're taking. We're going to be pushing them out there inside of the Recession Room. It's going to be a free trial, so there is no upfront cost. You guys can just come in, check it out, see if you like it. We really want to open it up so that way everybody can have in some way a resource to rely on while this is happening. You know, we're going to be putting out certain things, like there's different loans that you can apply for if you're a small business owner. There's different loans that you can apply for that a lot of people are getting approved of.
Different auto loans.
You know what I mean? So there's a lot of different things and a lot of different opportunities that pop up that can benefit you that you maybe don't know about during these times outside of just trading. So the Recession Room is going to be about everything dealing with the recession. Exclusively, yes, we're going to be talking about what's happening and how you can take advantage of these markets via, hey, these are the trades that we are taking. Okay, signals, I hate that word, but we are going to be putting out what we're taking. That's going to be massively beneficial for you. But then again, we're going to also have aggregated news feeds, instant updates on exactly what's happening in markets. So that way you're not surprised that, holy shit, you know, a million things could happen. All right, so guys, go to recessionroom.com. The link below is in the bio. There's a free trial link in the bio. If you don't go to the link in the bio, you won't be able to get the free trial. Go to the link in the bio, get the free trial, get inside of the Recession Room. We're talking in there every day. We've almost merged some of the Academy chat room stuff into there, so you're going to be benefiting from some of the things in the Academy as well. So go to the Recession Room in the bio, so that way you guys can stay up to date on everything that's happening in the recession. We're in there every day doing the research for you, so that way you can know what's happening in markets. All right. So again, yes, we have had a lot of members do well. All right, we're going to post that up. That's fantastic. But we want you guys to do well too. Okay. So who are some of the guys? I really want to get some of these guys on the phone. Hopefully later this week we can actually get them to kind of talk to you guys a little bit more about what they've been playing. We know Richard's had a really good week.
Yeah, Richard is about 200 pips. We know John, he was like diversified across some of the yen pairs and the USD. So he was up 900 pips.
Right.
With Jaden, Australia, bro, you've been doing crazy too. He was up a couple hundred pips, and then you got Anthony as well. So these are some of the top performers here.
Yeah, Tarif as well. Tarif, I've been meaning to get in touch with Tarif. Tarif has been doing an amazing job. I mean, some of our guys are, I hate to say it, they are seeing very substantial returns. In many cases, they probably have too big of sizes on. All right, some of our guys are sitting with five-figure P&Ls right now. Okay, this is the problem, you know, and they're asking, hey, should we liquidate? And this is the next phase of the conversation for you guys today is, are the trades over? Basically, if our guys are liquidated and if we're liquidated, I'm out of all positions right now. We closed out probably sometime late last Friday because again, there were some pullbacks coming on in. All right, if you guys can look right here, you got the Aussie dollar. You can see there are some slight pullbacks. This was one of the big trades that we were in for quite some time. I know we were playing also Aussie JPY. That makes total sense.
Some of these pullbacks are going to be shorter term, but we still have that longer term bias intact. So we're still looking for some longer term USD strength, some longer term AUD weakness, and some longer term JPY strength. But it's that short term that we can also take advantage of as well.
Yeah. I mean, even the NZD-CHF, one of the biggest runners, is also having pullbacks right now, right? So a lot of these pairs are pulling back in some capacity. And for you guys who have not had the advantage or really the opportunity to get in, which again, if you watch this channel, that should not have been the case. Okay, I know sometimes you don't want to listen to, you know, what other people are saying, but hey, we want you to do your own due diligence. And we understand that you guys want to do your due diligence so that way you're not getting in a position that you know nothing about. And we applaud that. We want you to do that. We don't want you to just follow us as if it's some type of gospel. But at the same time, this trade was really knocking you right in the head. This was one of the most obvious trades I've ever seen in my life.
Trade of the decade.
So again, the conversation now, is it over? where are we at? Do we think that this dollar can continue to rebound? Right now on the Euro USD, for example, we're sitting at 107. We have pulled back quite substantially from where we were, again, just even 2 weeks ago. Do we see the Euro USD continuing to push sell side?
I definitely see a lot more sell side with this, guys. And we've been looking at the dollar is the $4.50 level, so the $4 mids, looking for that Euro USD to come down to that level. So you're going to get some Euro weakness just with everything that's going on with this coronavirus. Italy has taken such a massive hit. You've seen other industrial production in the Euro area take such a massive hit as well. But combined with the USD, you're going to see that strength come in and push that Euro USD lower, possibly even breaking the 2018 and 2017 lows.
Yeah. So if we're thinking $4, that's quite some way. We're maybe around 300 pips. Of course, the market could wipe that out in no time. Do we see a little bit more of an up move, temporarily? That's, in my assumption, that's what I think we could see. Right now, again, we're sitting at 107. I say we could probably run back up into the 108 mids, maybe even touch on 109 until we get that pullback. So I'll draw that up. And again, we're going to be going over all this stuff every day in the recession room. The problem is here, this is very high end, and we can't really push out as often as we want, but in the recession room every day we'll be there. But as of right now, I do think that we could probably see at least a push back up into the 108s, 109s before we start to see that sell back down in the structure. Now, actually, here's the real problem. Right now, they're talking about stimulus measures. We haven't talked about this yet, which is the reason why we're getting this rebound. Right now, the S&P is up 7%. Exactly. So what, in your opinion, is this stimulus going to calm all waters? Did the dollar run too fast? Is everything going to be okay? What is your opinion?
I mean, the Fed tries, you can just see the administration trying to do anything they can to prop up these markets. I mean, you've seen it over the last few years, and now we're actually in a situation where they're pumping so much liquidity into the system. It's unheard of. It's unheard of. It's $50 billion a day. And from a fundamental perspective, yes, the dollar should weaken because of that, but you've got to understand that there's different funding issues and other factors that are affecting this dollar, such as like I said, the funding issues. There's also the safe haven aspect. And then you're going to see a move out of these foreign currencies into the dollar, and investors are going to have no other place to go but this dollar.
Right. So overall, just to give you guys a glimpse of what's happening in markets, the S&P has fallen 30% in the past 22 trading days. And again, that has not happened in what is now, I guess you could say, 80 years or so. Yeah. Now, that is, the velocity there is so fast that you have to ask yourself, are we playing in an inefficient market right now where there will be a lack of sellers down here at these lows? Again, this surge back right now, we have the S&P up almost 9%. Just today, it has retraced 2 of the past previous horrible trading days have been fully retraced now, because of this stimulus measure and because of just, again, more jawboning. Hey, we're here to help. We're going to support everybody. They're talking about how they're going to be a little bit more lenient on mortgages, not renters. So if you're renting a house or something like that, if you don't own your house, you're kind of screwed. But if you own an apartment building and you got a mortgage from a bank, you're looking pretty good right now. That's probably not where you need to go economically on how to, help people. You probably need to help the renters. Those are the ones that run the country. But at the end of the day, on no politics, politics aside, right now we're seeing a massive turnaround in the S&P. So
you don't want to confuse that.
Is this fake? Is this bullshit? Is this just some type of volatility? Is this a dead count bounce, or are we going to continue to see a drop here?
That's the thing. I mean, you can get these retracements, and sometimes these retracements could turn into a full-on trend change, or it could turn into, like you said, a dead cat bounce. But you kind of going back, and I kind of want to know your opinion too. When you've seen some of these previous sell-offs during these recession or the depression times, you're usually getting about a 50% sell-off.
Yeah.
We're at 30% right now. So I mean, what do you think kind of going forward, what we could see?
Yeah. So again, here you go, guys. This is the 20-year out, by the way. So this is what we're looking like. We're hitting off right here on the 38.2 on the S&P 500. We did touch back down on the 2015, 2016 highs there, which is pretty interesting stuff. Maybe that's where we get a cushion. You talk about, do I think we can see a 50% decline? That means, we're nearly almost there.
30%, you got 20 more percent to go.
Yeah, if we're talking about a 50% on the Fibonacci, we're only about 400 points away from that on the S&P 500. Yes, that equates to a large, capital drop in capital, but at the end of the day, do I feel like we could drop more? For sure, anything is possible. The most important thing that we can monitor right now is not what truly is happening in markets from an economic perspective, what we need to be monitoring is the tone, the psychology of markets right now. If the feeling that everything is going to be okay starts to embody all market participants, then everyone is about to look at this as a massive buying opportunity. And it was just a quick short-term maniac event. The reason why I mentioned that this part here is really important is because the country where the city where this all started, Wuhan, right?
Yeah, Wuhan, China.
They just stopped their lockdown. So they are now officially out of quarantine, which means regular civilian life may start to take place again. That is going to look like the staple. That's going to look like, hey,
that's the benchmark now that everyone's looking at.
Okay, well, that only took 2 months, right? And so people have done a better job, at least the U.S., hopefully, right? The U.S. is going to do a better job at managing that than China did. And if that's the case, then people are going to look at this as, hey, a lot of fear did come into markets, deservingly so in a sense, but we just had a $10 trillion loss in assets. It is time to start buying. Because what people are going to see is they're going to see an end of the road. That Wuhan is going to show that, hey, there is an opportunity that this can end because we're seeing it happen. Now, here's the part that could get, everyone in trouble. If we start to see resurgence of coronavirus cases in Wuhan where they have to go lock down again, that is where things can go crazy.
We still have Italy too they had 700 deaths in one day, and that's still increasing too. So we have to wait for a lot of that to start to die down as well.
Yeah, Italy has had more deaths than China has. We'll put up a graph here, and we'll link the graph below. This kind of stuff will also be in the Recession Room updates on what's happening with the coronavirus exactly. Will also be in the Recession Room, but you guys can see that, yes, there has been a substantial amount more deaths in Italy than there has been in China. So again, the resurgence is important, and we can't fit all of this in one video. I want to keep these kind of short. So we're going to be back here tomorrow, guys. Please make sure you guys subscribe if you like the content. And if you guys want to make sure more people hear about this, make sure you like the video as well. YouTube will bump up.
Like it up, guys.
Yeah, YouTube will bump it up, and it'll be much more beneficial for everyone to kind of see what's happening in this world. All right. So, but yes, at the end of the day, if we see a resurgence of what's happening in Wuhan, all across the globe, then yeah, we may see a turnaround here. So, that is an opportunity in itself, because that means we can start shorting the dollar, and it doesn't matter what our bias was. We always write this in pencil, as we always say. Right now, yes. Do we want to continue to see the dollar rise? Yes. But if we start to see that people are more optimistic about this ending, we might see a dollar collapse.
It's going to be dynamic in how we go about this.
Yeah, and that's going to be a massive opportunity. Okay, so guys, make sure you get inside that Recession Room. It's going to be free for the time being for you to access it. The link will be in the bio below. Trade extremely safe. We're going to be talking about where we see these all these currencies on a daily basis inside of the Recession Room moving forward. So that way you guys can have a conversation with us at any point in time. Again, that's going to be happening on a daily basis. I'm really excited for it. And who knows? Maybe the recession doesn't last that long. So maybe the room doesn't last that long. But who knows how long this can last?
Prepared, though.
And that's going to be extremely important. Okay, so guys, make sure you like the video. If you guys got any questions for us, post it down below. If you were one of our members or on the YouTube and you guys made money based off of what we mentioned last week, make sure you post that up below as well. We are so happy to see that people are making money throughout this time. That's really important to us in the trading business. All right, so guys, we'll talk to you guys soon tomorrow. All right, trade safe. Okay, get in that Recession Room. Talk soon.